Hi, this is Tom Bacharach from RMC Group, returning to talk to you a little bit more about captive insurance. In the second part of the 8 advantages of a captive. In the previous, we obviously talked about the first 4, so today I'm going to cover 5 through 8. So, as you may recall, captive insurance is a very effective and excellent risk management tool that can offer several advantages. If we recap the first 4 very quickly, we have coverage control, insurable risk control, we have cost reduction, and underwriting profits. But if we then move on to the final 4, one of probably the biggest advantages is year over year, when you're looking at your health insurance or your property and casualty cost, we see these rates going up and up and up every year. It's been that way, gosh, for as long as most of us have been alive. A captive can do, the 5th advantage, is giving you a little bit more rate control. Because you have the ability to look at different ways of underwriting this and the costs that are associated with, without getting into too wonky actuarial stuff, you have a range of coverages. So this captive is designed for you. You can also have some ability to set rates. Unless you've had significant losses, you can have a fairly level stream of cost year over year. The next advantage is when you look at all the different coverages that you have, there's lots of different ways to have that risk covered. Some is going to be you as the insurance company. Some is going to be a risk pool. But there's also the ability to even give farther coverages and to the extent that that liability can be shared. And so it will give you the ability to participate in reinsurance pools, which is going to give you a greater flexibility in those cost measures. So that's number 6. If we then look at really something that we touched on in the previous was when those premiums come into your insurance company, they become an asset. And just like every other insurance company, there's several different ways that they are going to make money. But most of it comes from investment risk. Imagine being able to pay premiums, get some of those premiums back, and then be able to get income because you and your advisor or your advisory team or your investment team has done a good job of picking conservative investments that are maximizing not only your return, but also the advantage of covering risk in this type of manner. So that's number 7, investment risk. And then finally, one of the areas that frustrates business owners, the fact that they don't get to choose what claims are real and what they aren't. A lot of times in a traditional situation, you'll have somebody come in and do, like a slip and fall, just a silly little throwaway claim that ends up being $15,000, $20,000, $25,000. And you as the insured, because it's being covered by the insurance company, have no choice to say yes or no that that's a legitimate claim. Well, as the owner of your captive insurance company, you actually have a seat on the claims committee. So you can decide what are legitimate claims and how those claims are paid out. Just because you've got a claim doesn't mean you have to pay it all in the first year. You can actually spread that claim out over a protracted period of time that helps not only with those assets, but also with that retention of liability. Again, to recap, 5 through 8, you have rate control, access to reinsurance, the ability to earn a rate of return on those assets that are those living premiums inside of that captive. And then finally, the ability to control how those claims are being paid, if they're being paid, and how they're being paid out. Captive insurance is designed for you to give you the best possible way to cover that risk. So again, my name is Tom Bacharach. You contact us directly at the home office, which is 239-298-8210, or you can contact me directly at 860-280-4182. Thank you.